Where to enter a trade? That's always a question, and a key question. But on days where there's an opportunity for a gap trade, the temptation is to enter maybe a little too quickly. And I want to illustrate it here on this chart of the S&P E-mini on Tuesday, January 14th. Now I have my cursor set up at about 9 o'clock. Now a half an hour prior, an 8:30 announcement caused prices to jump. And notice prices were coming in right at the previous day's close at 58.75. But then at the 8:30 announcement, prices jumped up here. Now I want to explain that I have the previous day's close, Monday's close, over here at 58.75, and I have my calculated trading zone below that. I'm going to take you through minute by minute and explain about the gap trade, which is my favorite trade, should be your favorite trade as well. But the gap trade can be deceiving and could be misleading because, as you all know, or you should know, the gap closes 70 to 75% of the time, but for 25% of the time when it doesn't close, you can lose a lot of money thinking that you're right and the market goes the other way. So when is the right timing to enter for a gap trade? So if I'm a conservative trader, and I suggest you should be as well, you want to enter at the right place. And where's the right place? Well, as I've said so many times, try to find the intraday high or low within the first half hour, an hour of the day, and see where it gets tested. And where it gets tested and breaks through, that's the direction, in all likelihood, that the market is going to take. So let me take you through this minute by minute, starting at about 9 a.m. Right over here, we're at the 9:30 mark, the first opening bell, okay? And prices drop down. Let's see, there are 10 points between each horizontal line. 10 points, $500 on the E-mini, $50 on the Micro E-mini. So a very substantial drop. So is this the place to get on for the gap trade? Tempting, especially since the calculated trading zone is well below the previous close. But nevertheless, keep your powder dry. Let's proceed further. Okay, so the market reversed almost immediately. Let's keep going. Market came down, came down, came down. Oh, this is a great place for a gap trade, except gap doesn't close. Close, if you take a guess to get on here, but how would you know that if you got on here, how would you know that it's going to go down within the next 10, 12 minutes? There's no way to know. Prices haven't been tested. And here is the high at 942. 942, we have a high of 59.08. Let's continue along the path. Okay. Prices now are going up, going up. Okay, so right over here at 10:15, prices reach a high of 59.04. Haven't taken out the 59.08 high that was put in about a half an hour earlier. So now, this is a tempting area to enter for the gap trade because we have a high, it's been tested. Is this a place to get on for the gap trade? Assuming we get on just after the test, look what the reward is. Hit the gap and went down to the trading zone calculated resistance. The place to get on this trade was right over here, or right over here when the high was tested, when we can be sure the high was tested and prices reversed down. So getting on over here at 58.97 and prices went down to 58.65. So about a 30-point trade. And notice that in getting on over here, in watching that this high didn't take out this high, it gives us a conservative entry. So that's my video for today. The gap trade is something I teach in my course. I talk about it a lot in my videos, and I hope you take advantage of it. If you trade no other trade, trade the gap trade. Watch for it, but be careful where you enter. Where you enter matters. Okay? That's my video for today. Thanks so much for watching. Marv Eisen from Timeless Dollar Trading Academy. Trade safely, use lots of patience, and I'll see you in my next video.